Hey guys, what's up? So today I'm back with another subscriber request, and it's basically all about how to buy a home on a low income, like, you know, the ability to be able to get a mortgage even though you're on a lower income. Now I know that this is an area of concern for a lot of people because I know that generally out there the criteria is that you need to be on at least like 25k in order to get a mortgage from a lot of the known lenders and banks out there. But in today's video I just want to reassure you that it is possible for you to get your own mortgage even if you're not earning up to 20k a year, and I think that it just comes down to three things. One, you need to increase your likelihood of being approved for a mortgage. Two, you need to think about maybe buying with somebody else and maybe like a joint application. And three, you can also look into some government schemes to help you on your way to buying your first home. Okay, so let's start off with the ways of how to increase your likelihood of being approved for a mortgage. Now, mortgage lenders look at a number of things to assess like your affordability essentially. And so if you're basically able to boost your affordability rating and look like you're somebody that can afford a bit more based on the things that I'm going to speak about, then you're going to be in a good position and you'll likely get a mortgage even though your salary is lower. So first things first, in assessing your affordability for a mortgage, of course the lender's going to look at your salary and basically your income in terms of the job that you're working. Now, in this case, if you're somebody that's on a lower income, then you need to focus on some of the other areas that the lender's going to be looking at in terms of your affordability. So let's move on to those. Next, they'll be looking at your deposit amount. Do you have a higher deposit? If you're somebody that's able to show that you have a higher deposit or even, you know, a good lump sum in your account, in your savings account or current account, then they're more likely to increase your affordability rating and give you a mortgage, because even though you're on a lower salary, it counterbalances with the fact that, you know, you have a higher deposit readily available. The next criteria that a lender will look at is your other sources of income. So do you do anything else outside of, you know, your main job? If you have other side hustles, if you have other like maybe freelance work that you do, contract work, it's definitely worth including that within your application. As well as that, some lenders also look at, you know, benefits, so government benefits that you may be getting. Some do actually classify that as part of your income and do accept that as part of your application. The next criteria that lenders will look at is your credit rating. So it's so important to ensure that you keep a good credit file, that you pay back money on time. Any loans that you have, you're paying it off as you should, and basically just keep a clean record. Like, even though you're on a lower income, it pays to show that basically you're someone that knows how to make repayments on time, because at the end of the day, a mortgage is something that you need to keep up payments on. And so if you can reflect that, you know, in your other areas of life, you're somebody that keeps up with your payments, this is going to work well in your favor. The next criteria that lenders look at is your outgoings. You want to make sure that your outgoings are definitely less than your incomings. So even though your income is low, you need to make sure that your expenses are even lower, and so it balances out, so it boosts up your affordability rating. Now, the final thing that the lender's going to look at is the property itself, okay? Is it realistic? Is it affordable for you? So generally, as a rule of thumb, lenders will give you 4 to 5 times your salary amount. And so if you're somebody that's on a £15,000 salary, the highest mortgage amount that you'll probably get is £75,000. So maybe you might need to start looking into another location to buy in, because, you know, the place you originally wanted to buy in is far more expensive than what you can afford. So these are things that you really need to factor in and be realistic when it comes to picking the house that you want to buy. So now that we've looked at the criteria that lenders will assess in terms of, you know, assessing your affordability for a mortgage, let's look at another area that's going to help you boost your application process. And that is essentially having a good mortgage broker or using some of these mortgage comparison sites that will help you access like specialist deals. I can't scream enough about the importance of having a good mortgage broker or using some of these mortgage comparison sites, because really you're able to access specialist deals that normally you wouldn't have if you went straight to your bank or another like high street lender. And also lenders that will consider your benefits as additional income to add to your salary. So yes, you definitely want to exhaust this method, get a good broker on your side and use these mortgage comparison sites. I'm going to link a couple of them in the description box so that you can refer to them. Okay, so now moving on to the area of government schemes as another option to buy a home with a low income. So sorry guys for the break in recording, and obviously for coming on here looking a bit rougher than usual. But as I said earlier in the video, this recording was actually made prior to the announcement of the new 95% mortgages. And so in that sense, the video is just a bit outdated. However, I just thought I'd include this snippet to bring it back up to date and talk a bit more about these new 95% mortgages and how this can help you if you're somebody that's on a lower income and you're looking to get your first property. Now, of course, this new 95% LTV mortgage is great news for all first-time buyers, not even just those on lower incomes, and that's simply because you can get a property with as low as a 5% deposit, so that's great news. The thing to take into consideration, however, is the fact that with these 95% LTV mortgages, you're kind of like choosing in terms of
of mortgage products are still more restricted in comparison to mortgages whereby the LTV is like 80 or 85%. As well as this, your interest rates are likely to be higher than if you got a mortgage whereby your deposit was higher than 5%. So now, can anybody get a 95% LTV mortgage? Can anybody get a mortgage whereby the deposit is just 5%? The answer is basically that lenders and banks will still go through like similar criteria with any other mortgage. And so they're going to look at your income, they're going to look at your outgoings, and they're also going to look at your credit score. These are the criteria that lenders are going to look at when deciding whether to give you this maximum 95% LTV mortgage. And so in short, it's not likely that everybody will be eligible or be able to get a 95% LTV mortgage. I'm going to provide a link to the Money Supermarket webpage, which talks a lot more about the new 95% LTV mortgages and also provides a calculator so that you can go on there and check out how much banks and lenders would be willing to give you.
So first of all, you want to look into schemes like the shared ownership scheme. Now this scheme is basically one that allows you to buy a proportion of a house, and so your deposit amount will be lower, and also the amount that you make in terms of your income doesn't need to be as high as with like getting a standard mortgage. And so this is definitely an option for you if you're somebody that's on a lower income. Yes, there are definitely some disadvantages of using the shared ownership scheme, including things like high maintenance costs and stuff like that. I've actually got a whole video talking about the shared ownership scheme, and so I'm not going to go into any detail because it would just be repetitive, but yeah, I'll link it in the cards for you so that you can refer to it if you're interested in that scheme. The next government scheme is the Help to Buy Equity loan. So basically with the Help to Buy Equity loan, you can buy a property with as little as a 5% deposit. So again, majorly reducing your costs and also how much you really need to be earning in order to get a property. Again, there are also some disadvantages of using the government Help to Buy Equity loan, and I've got another video about that subject also, so I'll link that in the cards. And now the final government scheme that you can use to get a property on a lower income, the right to buy. So the right to buy is basically for those that live in social housing. So you're currently renting with the government or a social housing provider, and so basically if you've lived in your property for long enough, I think the minimum is like 3 years for some places, you can get a huge discount to buy the property that you're renting. So that's another great way to get a property with a lower income. And so now finally, let's look at the option of buying with somebody else as another way to get a property on a lower income. So first of all, you can do a joint application. So you and somebody else come together to buy this property. By doing that, the lenders is going to look at both of your affordability joint together, so both of your salaries, both of your deposits put together, and in that way you're boosting your chances of also getting a mortgage. Number two, if doing a joint mortgage application is not feasible, you don't have anybody to do this with, then you could look into a guarantor mortgage. So your guarantor could be anybody. It could be like your parent, it could be a sibling, like just somebody that basically can stand and say that, if you're not able to keep up with your monthly mortgage payments, then they will cover this. Of course, in getting somebody on board to say that they're going to be your guarantor, you want to make sure that you can actually afford to keep up with the monthly mortgage payments. You just want to really have them on standby and basically say that, what, I can guarantee that this person can pay the mortgage. But yes, you really need to do some research into this, look at all the factors, look at how feasible it is, and make sure that you do not get yourself in any trouble or get the guarantor in any trouble. So do your research and due diligence to make sure that you know what you're getting yourself into. So that actually brings me to the end of today's video. Hopefully you found it useful, and please do give it a thumbs up if you have done, and please do also let me know in the comments if there's anything else that you'd like me to cover on this channel. So thank you for watching, and I'll catch you later. Bye.